Hello and welcome to Trade of the Week for the week starting Monday the 15th of August. Let's look back at the trade for last week, and that was short the FTSE 100. Now, first and foremost, we need to recognize that this trend has continued. As we can see here on the 4-hour chart, we have continued to climb higher, pushing up into the highest level that we have seen in around about 2 months, as we saw on Friday. Nonetheless, we're seeing a sharp move lower at the moment. That doesn't necessarily mean that this intraday uptrend is over, but certainly we've taken some of that away. 74.55, the key level to watch out for there. This trade is, I'm still happy to be short this market. Ultimately, we pretty much need to get into record highs to negate this trade, and I don't think that's necessarily going to happen. Inflation coming out later on in the week on Wednesday, where we're expecting to see UK CPI climb upwards once again. Remember, the Bank of England are expecting us to see 13.3 as the top end for inflation this year. So if we see further upside in terms of inflation, that could drive the potential for strength in terms of the pound. And remember, because of the fact that there's roughly 70-something% of the FTSE 100 that are reporting earnings having earned them abroad, it means a higher pound would be detrimental to the FTSE 100 and lead to underperformance for that market. So a lot going on, but certainly inflation going to be interesting on Wednesday. And for me, I still think that we're not going to overtake those record highs right away. I do think we're likely to top out soon enough. So happy to see this market and this trade remain open. For the week ahead, I want to look at gold. Gold heading sharply lower as we see here on the daily time frame. The wider context here in the daily chart does show you that we're still within this bearish trend, and we've come into this 61.8 alongside this prior support turned into resistance at 1805, and now seeing this bearish engulfing candle coming into play. This is the daily time frame. You can see that we do have a number of support levels here around about 1677 that have held and led to this recent spike. And so we might not necessarily get all the way back down to 1677, but certainly if we look at this wider trend, it is bearish. And now we're seeing here, we've run into this descending trend line alongside this area of support turned into resistance that was around about 1805. And we've got the 61.8. So a confluence of resistance broken below 1783, which is your first swing low. And therefore, I think this is likely to be the beginning of a bearish phase. And as we see here on the daily time frame, once again, the breakdown in terms of the stochastics out of overbought territory. Now, this is much more reliable when you're in a downward trending market compared to an upward trending market, because if you're looking at an upward trending market, you're going to look at the bottom end of the stochastics and look for buy signals on a breakout of oversold. We're still within the downward trending market, and therefore this break back below the 80 threshold, which does seem likely, gives us another sell signal, which as we can see here, gave us a very good one here. You can see this one worked out very well, and prior to that, we were trending upwards. So another thing to be looking at. So happy to be short gold, entering at current levels 1776 and putting my stop loss up above this prior high at, let's go 1810, and then to the downside, so that's 34. Let's look for a move down towards around about this structure here. So let's go 1712 for the downside target. And that gives us roughly just below a 2-to-1 trade for short gold.